dream team, and welcome back, Carley. How are you? Waiting to hear your voice.
I'm here. Thank you. Good
Oh,
morning.
good morning, Carley. You made a couple of nice forecasts
Well, thank
last
you.
time we were on. One of them, people you were getting some angry tweets because you were looking for lower yields, and they bottomed at 113, maybe just a little above what you were looking for, but
Mhm.
they definitely directionally you were right. And if you want to share your screen,
Sure.
I'm interested in what you're seeing now.
Okay.
For our audience today, Carley uh, implements option strategies with her forecasts of market direction, and interested in what's on the radar for you right now. Okay, there
Sure.
you go. See,
Absolutely.
so you're friends with Jim Cramer.
I am. Yes. Jim is,
Okay,
is a good friend of mine. He's a nice guy. First, I just want to let people know who I am real quick, and then I'll
okay,
take a look at the charts.
all right.
Carley Garner is my name. If you have any questions, comments, concerns, here's how to reach me. Um, I am a futures and options broker, so probably have a little different perspective than a lot of people you have on this show. We basically run a boutique brokerage shop. So we offer services like trading services. We provide people with trading platforms, give them advice, guidance. We answer our phones, which is something
Oh
that's rare.
wow!
I
Oh, you're
know
back
it's
back in the
totally
20th
crazy.
century.
It's insane.
Yeah,
So that's what
I
we
think
do.
it's great.
All
Everything's
right.
relationships, isn't it, Carly?
Oh, it absolutely it is. It is.
So, I mean,
So
how do you
it's a
form a
good time.
relationship with phone prompts?
Exactly. And I
Yeah.
mean, the reality is there's a lot, the futures markets are, it used to be when I first started in the business in the early 2000s, it was something that only a select few people with money or whatever had access to it, or most people just didn't know how to participate in the futures markets or didn't have access because it's a little more complicated as far as logistics and getting the accounts open and things like that. But nowadays, that's not the case. Nowadays, literally everyone with a computer with
Right.
some, minimal requirements can open a futures trading account, which is great. But it's also scary because I talk to a lot of people that truly, they open with an online brokerage firm that doesn't give them any help whatsoever. But these people need help. They really honestly don't, they can't even calculate profit and loss. I mean, just
They
simple
may not
stuff.
even
So,
be suitable.
thank you. I agree with you. Yeah,
Yeah.
it's technology's been great, but it's actually truly kind of scary. So
Yeah. What were you paying for quotes in 2000? Do you remember when you
yeah,
first came
so
in?
when I first came in, the quote most markets were not. We were just starting to kind of go electronic. So everything at that time was pit traded for the most part.
Yeah.
And so if you paid for quotes, what that meant was you were like, there was a guy standing in every pit, maybe two guys in some of the bigger pits that were recording prices like on
Right.
maybe a handheld or maybe on paper, depending on how early you go. And then they would report that to someone else, and then someone else would input that into a computer, and then I would see it on my quote screen. So that's a lot of labor going on there.
Yeah.
So the quote, ironically, actually, the quotes are still about as expensive. So right
Oh,
now for
okay.
CME quotes, I pay 460, I think somewhere in
Wow.
that ballpark a month. Back
Yeah.
then it was about the same, which is kind of crazy. But nowadays
Yeah.
what's happening is the professional traders that pay the higher rates at CME are kind of subsidizing all the small traders. But as a
Yeah.
broker, for me, it's worth it. As somebody that's not a broker, they might be frustrated at that. So
Yeah. Okay. So, what platform are you using for quotes there, Carly, that we're
So
looking
this
at right now?
this is QST, quick screen trading, and this
Okay.
is really the primary platform I use for charting and things like that. Um, Honestly, it's an excellent, fabulous platform. They're probably not the best at marketing because most people I mention it to don't have no idea what it is, but
Yeah. I've
it's
never
really
seen
great.
it. Yeah.
It's a little
Interesting.
pricey, but you get what you pay for. So
For sure. So,
yeah.
since we last talked, there's been a lot of action. Kind of a strong move in the dollar. We've
Yep.
had rates
Hmm.
rally from 113 into the 150s.
We
And,
have
looking, it's staring at the March
whoops,
levels of
not that one.
178. I'm kind of thinking pullback here before higher. What's your
Uh,
view, and what kind of option
so
strategies are you implementing in it?
so right. So
Yeah.
I think I actually am bullish treasuries, bearish rates again. I think we had a nice little pullback, and I think that this is temporary. I think we actually continue the uptrend that we started earlier this year in treasuries and downtrend in yields.
Okay.
And the reason, there's a couple reasons I think that this is a chart of the TLT. Even though we focus on futures, the TLT is a really good way to just see a big long-term chart.
Had a great day yesterday.
Right. Yeah.
It was
So you
up
can see
over 2 points.
it was. We're kind of holding trend line here, which makes me feel pretty good about it. Now, treasuries they're a messy market, like most markets, honestly. So even if we're right and treasuries are bottoming here, that doesn't mean we can't probe lower and run stops and things like that. So it's going to get a little messy. So what we've been kind of what we would encourage our clients to do with this type of a market is just keep it simple, very covered, something like covered calls, go long futures, sell close to the money or at the money options against it. That way you have a foot in the door, but you have a really nice downside hedge. So in the 30-year bond, you can sell. The March options are still a little thin. I'm sorry, not the March. The January options are still a little thin, but you can collect 2,500 or maybe a little less for an at the money option. That'll give you a 2-handle cushion to be wrong on the downside. And I think that's probably enough to get people through. And for higher rates.
Nice
Now,
hedge.
yeah, I mean, it does cap your upside potential, but you can, you know how this game is. Defense is probably more important than offense, and then just go from there. So
yeah, in the NFL too.
Sure,
lately,
absolutely.
there is no defense lately. Anyway, so that's interesting. I don't suppose you're looking for new highs. Could it be like what strike price call are you looking at?
Okay, so I'm going to go to the 30-year bond future chart, and 30-year bond future charts get a little messy because they expire every 3 months, and so you see all the snowflake over here, and everyone always asks, well, why don't you use continuous charts? And I get it, continuous charts are pretty, but you're literally looking at like fake data. So to me, it's just not my thing. So I don't know. I think we'll see new highs above and beyond what we saw earlier this year. I don't think we're going for anything like what we saw in 2020. I think that's just a little bit crazy. But
so
this
TLT is about 160. If you go back to the TLT chart.
Yep, let's go back to TLT. I think we're probably looking at, I think somewhere around the 160. We'll see. Gotta move sorry about that.
It's okay.
Should have had this marked up here, but I'm a big believer that previous support becomes resistance. So I mean, we're probably looking at 155-ish. Honestly, though, it tends to be a little bit of a range. So I would say somewhere between 155 and 159 on TLT.
So your support and resistance levels are not made of cement. They're more like mattresses, aren't they?
They are, and too many traders that I talk to. Yeah, they think it's like down to the tick, and then it broke your resistance. I'm like, well, I mean, not really. That's not how it works. I wish it would. Yeah, exactly.
Yeah, I know.
So that's kind of what we're looking for in treasuries.
Okay. What else do you have on the hopper?
So is anyone following natural gas?
Oh, who isn't?
Yeah.
Especially
oh my goodness.
The Europeans.
What a mess. What a mess that market's been. So natural gas has not been necessarily our friend lately. We actually, I had a good feeling that natural gas was going to 650. We actually went on Jim Cramer, he used our analysis and said nat gas is going to 650. It literally did exactly what I thought it was going to do. And somehow the trades just freaking did not work. It's the thing about the nat gas market is when it starts moving, the option in this case, it was actually more dramatic than any, like the VIX on not the VIX, that's the wrong word. The implied volatility on natural gas options exploded to 140. I mean, you can imagine the chaos of the VIX being 140 and the S&P, it was like that.
Yeah.
So the option market basically became broken. So we had bullish strategies, but it didn't matter because deep out of the money options were gaining more value than at the money options. I mean, just total chaos. The puts, as the market was going up, puts were gaining value. So like any bullish spread you had on kind of just lost money, even though it was in the right direction.
The market and the efficiency of the vehicle of the options market is what hurt you. That's very aggravating.
It was frustrating. Well, and the worst part is I just mentioned in the bonds, the covered call idea. We had some clients that we had in with covered calls. So we were long futures and short near the money or at the money calls against it, which in a normal functioning market, your delta is basically 50%. So as the market goes up, you make money, not as much as you would if you were just naked long, long op or long futures, because the option gets in the way, but you get the time value and it tends to work out pretty nicely usually. But in this case, the at the money options were gaining in value as much or more in some cases as the future, which really shouldn't happen, but it did. So, but the good news is if you have enough margin and time, you can wait these things out and they usually work each other out. Let me show you the chart that we're looking at here.
Okay.
So, and this is just to kind of give you an idea of how much volatility we've gone from. Like natural gas is known as the widowmaker for a reason. It's quiet until it's not, and that's kind of what we've seen. We went from this kind of normal volatility to seeing these swings that you see here are basically, let me see if I can get my calculator out here, like 1 day swings. This is per contract, $7,000-8,000 in both directions per day. So it's really easy to get chopped out and messed up in that. So we'll see how things go. My personal opinion of nat gas is like we've got two things going on. We have fundamentals here in the US, which quite honestly are not necessarily that bullish.
One of our attendees is making the point that there's a persistent large net short position.
Yes,
by
that is.
Who is the net short? Is it commercials?
No, large specs. Oh, sorry.
Large specs. Okay.
Yeah, and we had pointed this out. So that's I'm glad that he mentioned that. So the interesting thing about this whole move is usually when natural gas starts seeing a really big short position, it's when the market's at a trough, like here or, down here. In this particular case, the really big, large net short position accumulated up here around about $4, somewhere in here. Mm-hmm. Everyone just went heavily short. And so that's why we kind of thought, hey, something's not right. The market's high. We're at a multi-year high and everybody's already short. That's kind of a recipe for disaster. And that's exactly what happened is we got a really big short squeeze here in the US, which was probably triggered by everything going on in Europe and so on and so forth. According to the last COT report, traders are still pretty heavily short. We've wiped out a lot of it, but not all of it, which tells me we may have one more test of the highs somewhere. I don't know if I don't think we'll see a new high. I think we could get up around $6. I'm just hoping it's a little more civilized so that traders could, actually do something with it, but we'll see. This is just for perspective. This is where we are. So a lot of people are looking at this and thinking, and this is why the option market went berserk also. We see in Europe, natural gas prices basically roughly over 20 is kind of how it's been.
I'd want to trust Vladimir for my nat gas supply this winter. How about you?
Oh, no, absolutely. It's really amazing.
He's a humanitarian.
It's totally amazing how things have changed just in 8 months in the energy space. It's really crazy. I agree with you, but people look at this chart. Yeah. Also, let me just mention, they're looking for, people are thinking if we break out here, guess what? We're going to $9-10. And so everybody and their dog was buying call options and call options with 30 days to go. Strikes of $12, $14, $15 are going for thousands of dollars. It's just totally insane. Yeah.
So why don't we get to something dull? Like precious metals seem to be trying to bottom here. I mean, they held up pretty well with a strong dollar and higher yield, and they're higher today. I was wondering what you're thinking here.
I agree with you. I think they are bottoming. Metals are kind of mean. They're the type of market that it makes it. I mean, I'm not me personally. I'm not someone that is comfortable trading futures for some reason. Mentally, it just doesn't do it. Like it stresses me out and I worry about stops getting hit and things like that. So I prefer options. So this is a way to do it. The thing about
because
silver
you could be wrong for a day or a week and still get paid.
Correct. And in your
Got it.
mind, like this is an option trade we put out to our clients a week or two ago. I can't remember the exact date, but you get the idea. And the
Yeah.
idea is we basically want to be long silver. So we could buy a 2250 call, which is a little in the money at this point. Sell the 2350 call. So it's just a plain vertical spread, but instead of paying for it, we sell a 20 put to mostly cover the cost. So I don't remember the exact cost to get in. It was maybe $500, somewhere in there, maybe 8 cents, 10 cents, somewhere in there. But
can you make $5,000 if you captured the buck?
Yeah. Okay. So if you held all the way to expiration, at this point, I think it's maybe 58 days, somewhere in there to expiration. And if silver's above 2350, you keep the whole $5,000. So nice. It's a good risk reward, and you really don't have to get too stressed unless silver starts approaching 20. Below 20, you would have unlimited risk. So that gets a little hairy, and that's where things start to not be so fun. But you can do things like we encourage people to try to hedge. Like if let's say that it does get into trouble and silver does come and retest this line down here, somewhere around 21. Yeah. You may want to just sell a mini future against it. That way your delta's under control. And so if it does break below and sometimes silver has crazy moves. Sometimes it moves $1 in a day. You don't want to be caught with a naked short put on that. So if you sell a mini against it, stabilize it, see what happens. That's one way to do it. We had a similar idea in gold. I think
before you leave that, just back there, when I look at the wedge that you have in silver, Carley, I was taught that markets could retrace 100% of a wedge, and so you have it up there around $28. That to me is silver has potential to go there when we break out of the wedge.
Right. I think it does too. The problem was not the problem, but the thing about silver is it scares people out first. That's just the nature of it. It'll look like it's literally going to $10, and then one day, and then the next day it starts making its way to 28. So it's a wild one.
Anyway, it's a great look, nice looking chart. You do nice technical work. Okay, so gold, here we are.
Yeah, so this is very, very similar position in gold. It's the same idea. Yeah. We're selling premium below these kind of wild spike lows. Yeah. Because if, chances are gold's probably going to stay above that. Maybe it won't, but that's pretty, I don't want to say safe. That's not the right word, but that's a reasonable place to sell an option.
Trading.
Yeah, exactly. So we sell that put to pay for our call spread. I think this trade we were able to get into for few $100. So if the market trades sideways, I should mention on a strategy like this, if the market trades sideways and doesn't go anywhere, no harm, no foul. The premium erosion on the two short options, the short call and the short put, cover any premium erosion on the call. So it's no stress. If it goes up, you make the whole $100, so $10,000 possibly, if we're above 1850 at expiration. So it's a nice risk to reward, assuming gold doesn't crash. The risk of that is if gold crashes and you're stuck with a short 1675 put, but same thing, you can hedge with short futures. It does get messy and hairy sometimes, especially especially when things are moving quick. But
do you have a rule of thumb, Carley, on I think the biggest mistake people make in options, besides not taking in premium, is not buying enough time. That things always, for me, seem to take longer than I think they will, and I may think I'm buying a lot of time, and then in a few months, it's not as much time as I think I need. So
correct. And then what happens with that is, let's say you put on a spread or a trade, whatever it is, and your options expire after a couple months, and then you think, well, it didn't work. I'll just move on. And then literally a week later, it does it.
I've seen them the day after expiration.
Yes.
It's amazing how they could peg it. So do you keep an eye on open interest in the options market, knowing that the writers are going to try and peg it at where there's a lot of, to try and fry both the call and put buyers?
Yeah. That is a thing that people look at. Honestly, personally, I look at the futures market and then cater my option trade to it. I don't really look at the options too much, unless they're just if they're too thin or something weird. Yeah. Although in nat gas, I did recognize that with the option market blowing up, kind of the pain trade in natural gas is because everyone's
Yeah,
buying call. The reason puts gained in value as natural gas went up is because everyone's buying puts, right? Everyone thinks the market's going to crash like it has historically. And then other people think it's going up. So everyone's buying calls and puts at crazy prices on both sides of the market. So the pain trade is literally sideways, which is what I think will probably happen. Like everybody that spent all that premium, looking for a big
right.
move one way or the other is probably going to get hosed on that, unfortunately. So I do
So I
look at
think,
those sorts of things. Yeah.
yeah, so I think about, what you're doing here, looking for a pop in TLT and rally in metals, and it flies in the face of what everyone's thinking here about higher yields. And so
Yeah.
you kind of have a natural contrarian
Um,
attitude in the markets, don't you?
maybe, yeah, I think that's probably a fair statement. Sometimes that works against me.
Yeah,
Sometimes it doesn't. It's just one of those things.
a
The,
friend of mine once said to me,
Mhm.
Carly, Dale, how many times do you have to get hit in the head with a ball peen hammer to know that it hurts? I
Right.
said, well, I know more than once.
Yeah.
Anyway, anything
Over and
else
over.
on the docket? And I want to give you time, even though you introduced yourself, for people
Sure.
that might be interested in executing option
Um,
strategies with you to
I
be able to
actually do
find you.
have a bit of a
Oh,
contrarian view. I mentioned the other guest was mentioning the currency markets, and
yeah.
um, for most of this year, I was bullish the dollar, but the way that it's behaving now that we've had this little rally it
Hmm.
makes me really kind of question it. To be honest, I actually think that at least for now, I'm not talking forever, but the next couple of months, let's say, I think there's a pretty good chance that the dollar kind of rolls over and the euro makes a move higher. Now, the nice thing about the euro is the currency market has actually been very low vol for quite some time now. So
Yeah.
the options are cheap. So if you
Yeah.
want to play the upside in the euro, like we put out an idea to our clients to just buy cheap calls, like buy 118 calls for December. It gives you a couple months in the market. You don't have to spend more than 3, 4, 500 bucks on it just to have a foot in the door. Or if you
Are
want to get
they
a little more,
futures options
yeah,
based on the
yes.
euro
I'm
future?
sorry.
Okay.
Yeah,
All right.
futures options. Another
Hmm.
way to do it is to just go long the future, but then buy a put option underneath, which is what we've helped some clients do also. So that way they're long the future, but they have an insurance. So if this support does break and things start to melt down, you spent I think for 300, 400 bucks, you can get decent insurance to limit your total risk to maybe 1,000, 1,500. And that way you get a long futures contract without having to lose sleep at night. So,
Okay. Another great interview, Carly. Really,
well, thank you. Thank you
really
for having me.
appreciate it.
Yeah,
I really like your demeanor and I like your charts, and glad our
thank you.
paths crossed on
Yeah,
Twitter.
it's fun. Yeah, I
So
appreciate it. Thanks for having
yeah,
me.
so you're my trading warrior sister now,
Perfect. All right.
and I really appreciate you and your giving spirit to share your hard work,
Sure. Of
because I know you
course.
went through a lot to get to where you're at now. We all do.
It's yeah, you know how it is. You know the grind.
Yeah.
It's a
And
grind.
I hope you have a great fall trading season,
Thank
and
you.
that all your strategies come home for you and your clients. And
I hope
look
so.
forward to getting back together with you in a few months.
Thank you. I appreciate it.
All right, everyone.
Next time.
Carley Garner, and you could find her. There's her website. Uh,
Hmm.
Go ahead and give them
Yep.
it's thecarleytrading.com.
Correct. decarleytrading.com. That's us. You can sign up for a free trial of our client newsletters, kind of see some of the things that we're doing. There's a lot of educational material as well that's free. We think, an educated client is the best client. So we like to put a lot of information out there.
Yes, plus it doesn't take as much patience to work with them.
Well, you got
So
that
a
right.
little
That is
self.
true. That's true. I'm not going to lie.
Yeah, thank you so much. It
Yeah,
takes a
no
lot of
problem.
patience to teach, doesn't it?
It it does.
Yeah, it does. Thank you so much, Carly.
Thank
Have a
you.
great day,
Appreciate it.
and
You too.
I'll send you a little note, and we'll set up another
Sounds
time
good.
down the road.
We'll
All
be
right.
here. Thank you.
Thank you, everyone. And thank you, Carly. And remember, don't just count your option strategies or your crypto, and be careful in Bitcoin up here. And don't just count those, count your blessings. If you're out there shooting and speculating, you're in better shape than most of the people out there in the world. And, appreciate what you have. I once heard that happiness is you're happy wanting what you have instead of having what you want. So think about that. And I'll see everyone tomorrow. Adios.